sharing the recording, because like I said, it's just basically for me, for my purposes going back. And if you have any questions, we have a chat room that you can drop your questions into. So as I go through the presentations, I'm hoping to answer most of your questions. However, if I don't, Chrissy Sayer, who's a realtor, a friend of mine, will be manning the chat room. So she'll be able to answer the questions, and if what she doesn't get, I will address as we go along. And so with that, let's just get started. Thank you guys again, and welcome to our home buying class. And tonight, your presenters are going to be myself, Patricia Wharton, and my vendor partner who works with VIP Mortgage, Mike Riley. And so what's going to happen tonight is that I'll have the first half of the presentation to go over what a realtor does. And then the second half of the presentation, Mike will talk about the finance piece and what he looks for in the buying process. So just a little bit of background about myself. My name is Patricia Wharton. I now hold my license with Coldwell Banker, which is one of the larger brokerage companies in the world. We're international as well. And I have been a realtor for 5 years. I always tell everybody this is my retirement career. And I think I work harder at this than I did when I was on my regular job, but I really, really love it. And I specialize in residential homes. So I do the sell side and the buy side. It can be a townhouse, a condo, mobile, manufactured, or land. I just got a certification in negotiations to help me better service my clients. I have a master's degree in business administration with IT, and anybody that really knows me know I hate IT, but I needed it. And I'm a certified project manager and change manager. And why I bring that to the table is because I use all these skills to help my clients get their home either sold or purchased. So let's talk about our mission. Our mission tonight is to increase home ownership for first-time buyers. And I want to explain to you what a first-time buyer is, because if you purchased a home and own a home back in 2008 or 2010, and you're currently renting and you have rented for the past 3 years, you are considered a first-time home owner. And with that, there are so many programs out here for first-time home buyers and teachers and different other groups that you can get monies for. So even if you own a home in the past, if you haven't owned a home in the past 3 years, you are considered a first-time homeowner. So there's some benefits and different options for you as well. And one of the things and why we're doing this is because we know most people want to own their own home. So this statistic says 78% of people want to own their own homes. However, what we have discovered is that 7 out of 10 people currently rent. So they aren't even purchasing their homes, they're actually renting. So we want to help change that and make that 7 change from a 7 to a 3, where 3 out of 10 people are renting. And we can do that because the money is there, but getting through the process and knowing what to do is so important and key. And we also realize, and we agree with what Susie Orman has said, is that owning a home is a keystone of wealth, both financially affluence and emotional security. Just think about it. A lot of people I've spoken to and the buyers that I'm working with, their landlord has actually gone up on their home, on their rent, anywhere from $500 to $1,000. Can you even imagine the insecurity and the emotional strain that puts on a person, knowing that now they have this extra money and they have nowhere to go, or they have to pay this? And so owning a home is very crucial, because as homes increase in prices or appreciate, as the term is known, that money or that equity is what that person that owns a house owns. So that's making you wealth. So the agenda for tonight is we want to make sure we help you understand everyone's role in the home buying process. The buying process is simple. And I say simple, but sometimes it's not easy. And I'll show you the steps of why it's so simple. And then buying a home, you need a plan. Anything that you're really going to do, you're going to really need a plan. And then what's the average time to buy a home? What's the average buying time process here? And then the mortgage application. What is it that you need to have during the mortgage application process? And then the next step. And the mortgage application process, Mike will definitely be addressing. That's not my area at all. So understanding everyone's role in the home buying process. The first person that's in this process, and is very crucial, is you. As the person that's looking to purchase a home, one of the things we're asking is that you to be very transparent. I know we're getting into your business, we're getting into your finances, all of these things, but this is what's going to make a difference in you being successful in purchasing a home or not purchasing a home. I also want to share that as the realtor, my role is to find the house. As the lender, Mike's role is to help you come up with the best type of mortgage that meets your needs. I won't see your W-2s, your 1099s, your taxes, any of that. When Mike finishes his process, I'll get a form that's called a pre-qual or pre-approval letter, and that's what's going to help me determine what's price point you are looking to purchase in. So my job as the realtor is to just do the homes. Mike's job is the financial piece, and your job is to get us the information that we need so we can help you to become a homeowner. And then I have in here, remember your why, because even though the process is simple, I'm gonna tell you, you're gonna get frustrated about something. So just want to put it out there, and it may run smoothly, but I have not seen not one transaction I did that runs smoothly. But why I want you to remember the why is because in anything in life that you go after, there's always obstacles that come up. So you're going to have to put your blinders on and remember, nope, I'm buying this house. I don't care that, I can't go out to eat. I'm saving money. And so you need to remember what your whys are. As I stated earlier, the buying process is simple. We have a discovery meeting. It's you and your agent, and then we start viewing homes. What is that discovery meeting? Most of you guys, I've sat down and I've talked with you all, and we talked about what is it that you're looking to do? What do you want? When do you want to move? How much of a house do you want? What is the price point that you're looking at to purchase? Once we just have that discovery meeting to find out, yes, I'm really ready to purchase a home. This is what I want to do. This is when I would like to do it in. Then we'll sit down and we will have an open and honest conversation on, okay, this is what you have. This is where you're at. This is what you can really afford. Or you may want to wait, especially if you have a lease or something, breaking your lease and things of that nature. We then make sure that as we move forward, we set up this plan so that you're going to be successful. And then the fun part comes in. We start viewing homes. So based on your pre-approval, which tells me you either qualify for $400,000, $500,000, $600,000 for a house, you want 4 bedrooms, 2 baths, you want 2 levels, 1 level, you want a pool. I then start putting all this information together and create a customized portal for you. So then we get into creating the plan. So your plan, as I was saying, but the criterias and different things that you have, we have the pre-approval, so we know exactly what you can afford to purchase. And why? And then the other reason that is so important is because we don't want to look at $1 million listing and you only qualify for 700. Because once you start looking at $700,000 houses, you're going to be upset because the $1 million house had way more stuff in it. So I never take people out and look at homes just to look at them. We're going to look at in your price point, because otherwise you're going to be upset and miserable. And we customize that search. Do you need to be in the East Valley? Do you need to be near a specific school area? What are your specific criterias? And with our systems and everything being so electronic, we can customize that and make it very seamless as we go through this process. And then the fun begins. I'll send you homes as they pop up. You'll get them in your email box. We'll then say, hey, this weekend we're going to go out and we're going to start looking at homes, and we're going to go out physically looking at homes, because you can see stuff on Zillow, Realtors.com, all these other places, but it's nothing like walking into a home. You can't smell what a picture looks like. You can't feel what a picture looks like. So it's very important that we go into the homes and start looking at the homes. And once you find that home that you like, we can submit an offer. And you probably say, okay, we're going to submit an offer. So let me get into that piece for you. Submitting the offer. The average buying time when we purchase a home is anywhere from 30 to 60 days. And I use that time frame because there's so many different things that needs to happen. So like when you're dealing with investors, they always want a quicker 2-week turnaround. But when you're purchasing a home, you want to take as much time as you can get to do all your due diligence. And like I stated earlier, purchasing, you found the home that you like, it met your criteria, it checked all your boxes, and so now you want to submit an offer to that seller. And how you submit that offer is on a document we call the purchase contract. It is a 10-page legal form that has everything in it that you want the seller to know about what you want to do. The very first page is crucial because it talks about the purchase price. What do you want to purchase? What do you want to purchase that home for? And that price, I work with you as the buyer to come up with the price. So we'll look at homes that are pending. We'll look at homes that are under contract, and we'll look at homes that are active. And we can talk about the market, and I'm going to get in some of the other jargon, but based on looking at all these homes that have the same criteria, it's the best way to make an offer. So you're not guessing at, well, maybe I should give them 400,000, or maybe I should come in at XYZ. So having what we call comps to help us come up with the best price is how we come up with the purchase price. The second piece in this contract is your earnest money. Now, you've heard a lot of programs that said no money down, different things like this. You will always have an out-of-pocket expense with your earnest money and your inspection. So you're still going to need some money in doing this process. So when you submit your offer, you're going to want to put down some earnest money. And that earnest money is telling the seller, hey, I'm serious. And this is the type of money I want to put down out of pocket, my money. I'm putting it on the line, and it is at risk. And I'm going to share with you why we make sure we cover it so that you don't lose your money. But that tells the seller how serious you are. The difference between the purchase price and the earnest money is the piece that you're going to get financed or you're going to get cash. So this lets the seller know this is how much we want to pay. This is how much we're putting down for earnest deposit to hold the house, and the rest is going to be financed. In this document, we also ask them, we tell them when we want the keys to the house. It is called close of escrow. So once again, the 30 to 60 days. And I always like to tell clients at least do 30 days, because by the time you pack, clean, do all the other stuff, those 30 days go by pretty fast. So the seller then knows, okay, this is the price, this is when they want to close. The other crucial piece in this document and the purchase contract is the title. Because remember I said the money, your earnest money, you need to deposit. We use a third-party company, the title company, and the title company is the company that will handle they will handle the money. They will do the background check on the deed to make sure the person that's selling the house owns the house and all the other little preliminary stuff. And we'll choose which title company we want to work with. From there in the contract, the next crucial piece is it's the inspection. And the inspection, when you purchase a home, be it a new home or a resale home, you always want to have an inspection because you don't know what's happening within the house. And that inspector will investigate the house from the roof to the ground, from the inside to the outside. They're checking for everything, termites, the water, the whole 9 yards. And this process can usually take anywhere from 2 to 4 hours. But the nice thing is that after the inspector has finished his work, we, the buyer and the seller, meets the inspector at the house, and we walk through the house with the inspector to see exactly all the things that they uncover. And the report can be very, very long. So this inspection period, we usually ask for 10 days. So that's crucial to have. And then the very last page, we ask for the seller to respond to us, usually within 24 hours. So in the purchase contract, this is a legal document that has everything in it that you are telling the seller how serious you are about purchasing the home. And it has a lot of, I want to say fail-safe features in here. So if something happens that's out of your control, you won't lose anything. And as your agent, my job is to stay on top of this. So we are making sure that everything is in place. So talking about the inspection, like I stated earlier, is important for a new build as well as an existing home. And in that inspection, when that inspector gives us that report, we're going to look at it together, and I'm going to point out things that if it's just cosmetics, like you don't like the color of the paint, that's just cosmetic. But if it's broken or safety issue, we're going to ask for that seller to repair that. And how we submit that request to the seller is on another form that's called the BINSR. So once we identify from that inspection report the things that are very crucial for you to have repaired or replaced, because we're not going to send in the entire inspection report, because trust me, it is going to be a very long report, but it's not. You already know you're purchasing a pre-existing home. So there's just going to be something wrong with home because it's just been used and worn before. So we're not going to ask for everything on the inspection report, just the things that are safety broken. And then we can talk about the things that are worn. So if the air conditioner is on its last leg, that is something we want to address because that's a big ticket item. Once we submit that BINSR to the seller, the seller then has the option to come back to say, yeah, I agree with all these things. I'm willing to repair, replace, or fix. Or no, I'm not willing to do any of it, or I'm willing to do part of it. So if they're not willing to do any of it, then that ends the contract. But for this presentation, they say, okay, that's not bad. The seller responds back to us and say, I'm willing to repair this. The seller and their agent then start working on refixing and repairing those particular items. While they're doing that, then we are called the lender and say, okay, we finished. Hopefully we're still within that 10 days. We'll call the lender and say, hey, okay, can we get the appraisal done? And Mike will get into more details on that. And they will reach out and find an appraiser to come and appraise the house. And why that's important is because the appraiser wants to make the bank and who's ever funding you money wants to make sure that the money that they're giving you the house is of value. They're not giving you $500,000 for a $300,000 house. Does that make sense? So that's why that's important. So say the appraisal is done and it comes back and the house appraises over value. That's happy dance. But say if the appraisal comes back and the house does not appraise at the purchase price, then we can go back and negotiate, and either the seller can come down, you can come up. There's some options we can do, or we walk away because we don't have the money to finance it. And at this time, you don't lose your earnest money either. So that money that you put up to say you are willing to purchase this home and take it off the market, if things don't work out, you're able to get your money back. Once we go through the appraisal process, the seller's agent is now sending us information back regarding what's being repaired, what's being fixed. Title is asking you for background information. Mike is asking you for the last pay stub, so to make sure that you're still working. And we have finalized everything. We have dotted all our I's and we crossed all our T's. 2 days before the close of escrow, we want to walk through the house again, because we want to walk through to make sure that the refrigerator is still there, the cabinets are still on the walls, that the home is in the condition that we saw it when we made the initial offer. Once we do that final walkthrough, we'll sign off on that and send that into title, and then they will schedule a time for you to sign and arrange for funds to be transferred. Now, they can send a notary to you, or they will have you come into the office. You have the option of choosing what is the best solution for you. Once you do that, all the papers are signed, funds are transferred, we can now holler, congratulations, you are now a new homeowner. Once the deed is recorded with the state, I'll be able to pick up the keys from the seller. The seller, on the close of escrow, the day that we close, they should be completely out the house, so that now it is your house. And I'll meet you there with your keys and other little wonderful gifts for you. So that's a high overview of the buying process for purchasing a home. And at this time, I'm gonna stop, because I've been talking for a minute, and ask, what questions do you guys have? Any questions in the chat, Chrissy?
No,
Okay.
no questions in the chat.
Well, one of the questions I get often from buyers is that if the house appraised for more than we're purchasing it for, can the seller come back and ask for the difference? And the answer is no, because you're under contract. Because they agreed to sell it for you for $350,000 and it appraised at $400,000. That's your equity. That's your money. So they can't come back and say, now we want to change the price, because you now have a contract. And that's why it's so important to do everything legally and use a realtor and get the work done.
Patricia,
So,
oh, good.
Say, I can't hear you, Chrissy.
We just got a question in the chat.
Mm-hmm.
So the question is, what is the realistic time frame from start to finish?
What is the realistic time frame from start to finish? Are you meaning from the time you start the process of actually looking to purchasing, or okay, so say, okay, let me tell you this way. Say if you just decided you really want to look at a house and you haven't done anything, and we meet and we have our initial planning, it may take anywhere from 2 to 3 months for you to get your finances and everything else in order, and then us moving forward. So it can anywhere be from a month, from 2 months to 6 months, depending on what it is that you need to have done.
And then there's a clarification on, it's after getting the lender approval, so after Mike's approval.
Oh, great. Well, after Mike's approval, then it's just a matter of going out, finding a home. And that's, depending on, I'll still say 2 months, 2 to 3 months at the max, because you approve. We looked at criterias and I've already started sending you home. I always ask my clients to drive around in the area that they're thinking about living in, drive around there during the day and drive around at night, because it can make a world of difference as to, oh, this is really where I want to live, or nope, this is not where I want to live. So that time frame is you're looking at 2 to 3 months. All righty. Well, with no further questions, I will turn the presentation over to Mike Riley with VIP Mortgage.
Thanks, Patricia. Did my speaker come back on? Okay. Hi, everyone. I am Mike Riley. I am a mortgage loan officer with VIP Mortgage, specializing in forward and reverse residential mortgages. You're purchasing your first home is going to be a typical or forward type mortgage, but we do reverse also if we get down to that. There we go. So let's talk about the mortgage application. The mortgage application is going to ask you a lot of information that I kind of like to go over, because like Patricia said, we're going to go at a very high level on most of this stuff. And there are a lot of specifics that people have questions on that we can kind of discuss one-on-one. So this is kind of the top line information that we're going to need on the mortgage application as to who's borrowing the money, all of their personal information. Then we'll talk about their credit, get documentation, talk about down payments, what costs to expect as part of the process, and then get you pre-qualified or pre-approved. So on the mortgage application, talking about the borrowers, it's important for us to know in the beginning who is going to be on the mortgage. They don't have to be related. They don't have to, you can have anywhere from 1 to 16 people on there. It doesn't matter. That gets a little convoluted, but if you need to have that many or want to have that many, we can do that. And then we also need to know who's going to be on the title of the home, because it's different. The mortgage is the financial obligation of the purchase of the home. Title is the legal ownership of the home. You do not have to be on the mortgage to be on the title, and you don't have to be on the title if you're on the mortgage. We need legal names, your actual marital status, your citizenship, your date of birth, and of course your social security number. For the information on the application, for most things, we have to show a history of 2 years. So we're going to need 2 years history of where you physically live, not PO boxes, and where anywhere you've worked, and as well as any gaps of employment to cover that 2-year information. When we talk, we'll also need to know specific information about your income, of how you get paid. Is it hourly? Is it salary? Do you get overtime or commission or bonus or anything like that? We're also going to talk a lot about your assets. Now, what I do is make sure that I have a full picture of all of your assets. We may not use those for the application or the qualifying purpose, because for every account that I list on your official application, we have to have documentation for, and I don't like killing trees, and I don't like you to have to provide a lot of information if we didn't truly need it. So even though you might have 1 million accounts across 6 different banks, if I can get away with using one, that's what we'll do. Military service is also important information for us to have, as well as any dependents that you're financially responsible for. Credit is one of the big ones, and especially since the bubble burst back in 2008, and then all of the regulations that came out. Since after that, there's always been minimum credit criteria, and each type of loan requires a different type of, and then if you're using any of the first-time homebuyer programs or down payment assistance or anything like that, those all have separate requirements on top of what the minimum might be for the loan type. You don't have to have perfect credit. That is a misnomer. We just have to be able to show that you have the ability and willingness to repay the debt. A lot of people nowadays have medical collection accounts, and while those will affect your score for the time being, they keep talking about changing things where it doesn't, but I haven't seen that come through yet. For the most part, those are ignored. You don't have to worry if you have medical collection accounts. We don't have to do anything further on those. We can tell what they are. Non-medical collections are a different type of item that we'll discuss individually, but don't try and tackle paying those off on your own, because that could make things worse. In today's day and age, there is Credit Karma out there. There are other options for accounts that you might already have for Experian or one of the other bureaus that might give you credit scoring information. Use that as a guide, but don't use it as a end all be all, because especially with Credit Karma or any other third party service that's not the bureau directly. The scoring algorithms that Credit Karma uses are very different than what the actual bureaus use. And there's different type of scoring algorithms. In the mortgage industry, we're still stuck on like version 2, where if you want to apply for a credit card or a car loan, they are on the latest and greatest score 8 or version 8, and that scoring is very different. During the initial process, we have the ability to do a soft pull, so it's not a hard inquiry on your credit, so that if we have anything that needs to be addressed, we can do that without triggering anything else or actually affecting your scores. You'll be able to see your scores, what accounts are reporting on you, and how they're reporting on it. And again, if we do need some credit repair, for the most part, the systems that we utilize will give us, if you, for example, were at 600 and I needed a 620, most of the time we can tell you what is the quickest and cheapest way for us to get you the score that we need you to be at or would make you eligible for benefits. There are oftentimes that we have to refer you out to a third party, but that's usually in severe cases. So we'd like to take a look first and be able to help you out so that you're not having any added expense. Documentation is a big one for us, and it is part of the pre-approval process. We're going to need your identification to verify that you are who you say you are, and that's part of the U.S. Patriot Act that went into effect. Your income, we're going to need actual documentation to show what your most recent pay stub, and as Patricia said, during the process, we'll need more as things go. And I know a lot of people get irritated with me because we keep asking for more and more documentation, and I'll tell you in a minute why that's important. But we'll need to verify your income with previous year's W-2s and your most recent pay stub from your current employer. Assets, any account that you tell me about that we're going to use as part of the application, we have to have supporting documentation for it. So we'll need 2 months worth of statements for any type of account. Some banks or investment firms especially do quarterly statements. So then one statement is sufficient if that's the case. And then if we're doing any kind of gift letter, any kind of gift from a family member or any other eligible donor, we'll need proof of funds about that. Where it says more as needed, we sometimes open Pandora's box. If we see there's guidelines written around, if we see large deposits on your bank statement, then we have to get supporting documentation of what that was, so that money didn't magically appear. Everything in our world has to be able to be paper traced. So if you had $10,000 sitting under your mattress that you suddenly deposited it, they will not allow us to use that money. We would have to wait for that to season out, where any of the bank statements that we have get copies of, that deposit doesn't actually show. Down payment, this is a big one. And a lot of people still think that you need 20% to put down on a house, which is not true. You can have as little as 3% to 5% are the minimums, depending on the type of loan that we're doing. The only caveat to that is to be able to allow people to put less of a down payment down, you do have to have mortgage insurance, which is basically an insurance premium to protect the investor to cover that gap between the actual amount you put down and that 20%, so that if they had to foreclose for any reason, they are covered. Gifts, when you come up with your down payment, the down payment can come from your own funds through your own investment account or bank account. It can come from a gift from a family member, employer. Each type of loan has different eligible donors that can come from. And you can also do down payment assistance. There's a variety of programs that are out there that, depending on your specific needs, we can go into. And as Patricia had mentioned before, there's certain ones that are out there for military, and there's certain ones that are out there for teachers, all kinds of different things. So that's something that we'll discuss as well. The big thing that everyone knows you have to have when you're purchasing a home is that you have to come up with a down payment. And we just said that's anywhere from 3% to 5% on the minimum side, but of course you can put as much as you want down. But one of the other things that you have to anticipate and plan for are closing costs and prepaid items. So closing costs are going to be loan fees. There's costs to do your loans. You have options, or sometimes they'll even force it to pay what are called points, which is typically a way to buy your interest rate down, especially in this kind of market. The appraisal that Patricia mentioned, there's a fee for that. There are a couple of ancillary fees for your credit report. We have to verify the property is not in a flood zone. If it is, we then have to make sure that you have proper insurance coverage for that. The title company that Patricia mentioned is another one. There are fees for their services, and no one really gives a lot of thought into title company, which is why Patricia is there to help you in selecting one, because the title company is ensuring that when you get the deed to your new house, that no previous person or persons or companies that may have had a claim or did construction, for example, for a previous owner, they can't now attach a lien to your house for services they did during a previous ownership. You're buying insurance and protecting yourself for that. Any house in Arizona that was built after 1990-ish is probably going to have an HOA. You're going to have some type of transfer fee with HOAs. You're going to have recording fees for the county. All kinds of little things like that as well are all part of your closing costs. And then you're also going to have prepaid items, which the way to look at those are items that are being paid on your behalf. So your homeowner's insurance policy, that is prepaid. So a 1-year premium, that's going to be needed. Impound cushions, as typical, although when you get to more than a 20% down payment, it becomes an option, but with less than 20% down, you don't have the option. Your property taxes and homeowner's insurance are going to be included in your mortgage payment. So we need a couple of months worth of those payments as cushions so that when they become due again at the next interval, there's enough money in there. Interest is another one that we have calculations that we have to do that from today is the 22nd. So for example, if today was your closing day and Patricia was giving you keys today, you're having to prepay the interest from today, the 22nd, until the 1st of the following month, because then your first payment would not be due for another 30 days after that. And then some HOAs will require that your dues are paid ahead of time, usually a month, maybe 2 months, depending on the association. Those things plus your down payment all total up to what we call your cash to close, which is the final number the title company will call you with and say, that's how much you need to, as Patricia's step listed before, that you need to come up with in order for everything to go through and be secured and recorded. Now, your pre-qualification, pre-approval is something that Patricia needs. I typically don't do pre-qualifications because that basically means I ran credit and I went off of everything that you said. I do pre-approvals, which means that I get the supporting documentation to say that if you told me that you made $25 an hour, I have a pay stub that says you made $25 an hour. If you said that you were putting $20,000 down on the purchase of the house, I've got a bank statement that shows you have the $20,000 and we're not going to have any hiccups. My job in the initial stages before you go out shopping with Patricia is to make sure that the form I fill out that she has to use to submit an offer is as strong as possible. That I've done, there's not going to be any unexpected hiccups or anything like that unless it's completely out of left field as we go through the process and underwriting to take care of making sure that you get your final approval on the house. The pre-approval, like I said, is all documented information, gives you a much better possibility for the final approval from the underwriting. Sometimes, depending on the situation, especially if we have self-employment, I actually send it off to the underwriter to have them double check my calculations on income because there's a lot of rules around self-employment. and commission and bonus and things like that, just to get an initial sign that I can actually put a note on your pre-approval letter saying that the underwriter is already reviewed. Everything else left for final approval is just subject to the property itself. With that, I send the form over to Patricia and you go happy house. There's a lot of hurry up and wait in my world. Then I will kind of sit quietly, but check in with you from time to time while you are out house shopping with Patricia. And then once you get the contract accepted, then she'll send that to me and we'll kind of start the ball rolling again. Although you're not going to have to resubmit anything. If it does go on the longer end, like Patricia said, with how long it took you to find the house, we have to make sure at the time of closing, all of the documents that we have in your file are no more than 60 days old. So if we have this is August, if the last pay stub that I got from you was during the pre-qualification process, which was May, I'll need an updated one. Same thing with your bank statements to make sure that they're fresh within 60 days. It's also very important to make sure that you don't go out and make any large, once you get your pre-approval, we've looked at your credit, that part is done, you're out house shopping. We want to make sure you don't buy a new car, you don't make any big purchases, you don't open any new accounts, even though American Furniture Warehouse might give you the best deal in the world to furnish your new house while you're out there. That could really screw our approval up because your credit score is going to drop with a new account opening. You're going to have a new payment associated with that, and that could throw ratios and things off based on your approval. So make sure you don't do any of that once you're out house shopping. And I think that's it. Do we have any questions on financing side, Chrissy?
Yep, one question just came through. Do you refer or recommend credit repair companies?
I do have a couple of them that I can refer to you if it's that severe that I can't help. Absolutely.
That was the only question in the chat.
And one of the interesting things I've found working with Mike is that I have several vendors that I work with, but one of the reasons I like working with Mike, besides the fact he laughed at me the very first time he met me, because I was sweating profusely from putting out open house signs in his neighborhood. And I'm like, okay, this man acts like one of my brothers, but I like the fact that he does things to make you successful. So say if you have something on your credit and you kind of questioning it, some places they won't even touch it and tell you what to do. He will look at it and say, hey, okay, these are some suggestions. And as he stated earlier, if it's really, really bad, then we go to a credit repair company or something of that nature, because they charge a fee, a monthly fee. But if you don't have, if your credit isn't that jacked up where you got a collection over here, you got default over here, or you really don't know what's going on, it's best to just have that person take a look at it immediately, the lender. And then from there, if it's something they can't do, then we will look into a credit repair company. So that's the high overview of our presentation for first-time buyers. And Chrissy has a question.
Yep, there's one more question. Actually, two more questions that came through. The first one is, will student loans affect buying?
Yes and no. That student loans right now, and since COVID happened and the CARES Act went into place, that has created an interesting thing. So student loans, the on one side of the coin, because student loans are government subsidized, mortgages are government subsidized, I can tell you, you can have been late in your history, but if you are currently late or have a student loan that's in collection, you won't get an approval for the mortgage. We need to get that part figured out. The other part of it is on payments. Both Fannie and Freddie and FHA all have different rules around those. So typically what happens on student loans is we have to either use a percentage of the outstanding balance or the amount that the servicing agent for the student loan is showing as your payment. That gets a little, especially right now with CARES Act, because everyone's in forbearance until October 1st. So that makes it all show as zero. Therefore, we have to come up with a calculation based on the outstanding balance. We can, and we often suggest, if you are in an income-based repayment plan or IBR, then we can get documentation to support that, to show what your actual payment is, because they often don't update the credit report with that and use that to do calculations as well. Does that answer your question?
I see the thumbs up.
Okay, perfect.
And then
What was the other question, Chrissy?
Yeah, the next one is, and I know this is on the next slide, can Mike post his info again, please?
Oh, yes. Yeah, that'll come up again.
What will come up again?
My contact info.
Yep, contact information.
Sure. Let's see. Okay, this slide, if you guys have your phone, if you can scan over this code, the buyer's guide, this guide is, I think it's 27 pages. And it goes into greater details so that you'll be able to say, okay, what is this? What is that? And take you through the whole process. So if you can scan that code, and if it doesn't work, just let me know. Because I know sometimes with my Android phone, scanning QR codes don't work. And then it's like, and we look forward to working with you. And then here's Mike and my contact information. I just want to thank you guys for taking time out and remembering to jump on the call and getting this information, because one of the challenges I have and things that really bother me as a realtor is that when I'm working with buyers, you guys don't know, and we get to talk in our jargon and running 40 going north, but it's like you want to purchase, but what we're talking about doesn't make any sense. So my purpose for doing the session is to give you a better overview so you'll have a better understanding of what the process look like. And then that QR code will take you to an electronic buyer's guide. So it'll talk about the different terminology. What's a deed? What's a close of escrow? All the different terminology and the different things that we talk about is broken down so that now you will have a better understanding of what's going on. And as an agent, my job is I want to work with my clients and give them the information and education so that they can make an intelligent decision. Because one of my very first home, I settled. I let the agent talk me into purchasing this house, and it was okay, but it wasn't my dream home. It really wasn't what I wanted. And even in the buying process, we did some things, but I didn't know. So since I went through that, I don't want anyone else to go through that. And so I want to make sure that I take the time to share the information and give you guys as much information as possible so you can make an intelligent decision based on data and not based on the noise that you're hearing out here or what you see on TikTok. And TikTok has just been has given me a headache with people telling me what TikTok said. It's like, no. So that's the whole purpose. And I hope that this session has given you a better understanding of the buying process, what it looks like. And once you click on that guide, you'll have more details. So is there anything else we can answer for you? Because we actually have 7 minutes.
Does that mean I talk too fast?
I don't know. I think we did well because we wanted to make sure we had enough time for questions. Well, most of you guys have my cell number. our contact information. As you think of things, please feel free to reach out to me. You have Mike's information now, and if you don't remember it, I have him on speed dial. So I'll be able to get him to you as quickly as possible.
One question came through. Do we sit down with Patricia or Mike first? When
Patricia.
starting?
My recommendation is to sit down with, well, at this point, and considering I know you guys, and most of us have talked about real estate in some shape, form, or fashion, I would be comfortable to say, yeah, you guys you're ready to go talk to Mike now. The difference with Mike's program, because some of you guys have talked to you about some of the monies that are available for minorities, and that's usually handled by banks, Chase Bank, Wells Fargo, Bank of America, UMB Bank, BMO. And the other thing is they have this money set aside. However, you really need to start your process, because that money is not going to sit there. I'm not the only agent that's talking about it. So once that money runs out, it's out. With Mike program, Mike is able to help you with the different, like, first time home buyers, veterans, and things of that nature. And then there's brokers that I work with that actually shop around to get better deals. So depending on what your needs are will depend on which lender you want to go with. But as I stated earlier, I know Mike, because things that happen and I don't even have to know about it, but he'll work it out, fix it out, figure it out, to keep the transaction in play, and then also to help the client. So you have someone that has the knowledge. He has over 25, 30 years. So he's seen it all and been around when the market is up and the market is down. So my thing is I definitely want to work with people that when I send you over there, I know that you're going to be treated professionally, given the right information. And so, yeah, since I'm, like I said, most of us have spoken, you want to call Mike, that's great. Was everybody able to scan the QR code, or do I need to go back? Because this is, this document is going to be really, really important because it has so much information in it, and you can go back and just read through what you need to see and know. And we do look forward to working with you guys. All right. Well, if there's no other questions in the chat, no hands raised, I just want to say thank you guys for attending our session tonight. Please feel free, because I know something will probably pop up as you're thinking later on. Feel free to either reach out to me or to Mike, and we will get back to you as soon as possible. And thank you again for joining us for our first homeowners educational class.
Thank you.
All right. Thank you, guys.